Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Now, today we have basically the confirmed details of the E&Y breakup plan. It is official. E&Y had a global, a global meeting today, and Carmine Di Sibio was leading that. And one thing he released, which we still have to analyze, is the global revenue, which is $45 billion revenue, compared to last year's, which was, I believe, $40 billion. So that's significant growth year over year. But we knew that was going to happen because all the big four accounting firms in the foreign locations have been reporting record years. And this just confirms that this was the best year for all the accounting firms. We told people to make sure that you get the best raises and bonuses this year because things are not going to be doing that well going forward. Today in the U.S., it's confirmed that it was a recession, even though the news is trying to redefine what a recession is. There's two declines in growth, quarters of decline. But back to the E&Y story. So you have record revenue, and now E&Y is trying to take advantage of that record revenue by splitting up the firm. And just, no matter what they say, they're cashing out. The assurance partners would cash out, and then the consulting partners would receive equity in the new company. And it's still, even after this global thing, it's still unclear what's going to happen to the tax people. Carmine Di Sibio told the tax people that they're very essential, but they are essential to both assurance and consulting. So I think there's more details to come on that. So make sure to subscribe. But also, it seems like some might get a choice. Like obviously, if you're in locations that are audit heavy, like New York in the U.S., then you're probably going to go with assurance. But it's still a little bit confusing from that end. But the high level, there's going to be two companies, as the FT.com article spoke about. There's going to be Assureco and Newco, and that's not going to be their names for forever. These are just their proposed names. And one thing that Carmine Di Sibio also said at the beginning of this webcast was that none of this is completed. They're just considering it, but they are pursuing it because he prepared all these slides about the deal. So in their mind, this is already done. It's just a formality to get it approved. And they kind of wrapped it up by saying that the two firms must be better than the one, which is, it's just a slogan. Just like they say that they're a purpose-driven firm, but I think all the big fours say that they're purpose-driven. And I couldn't remember what E&Y's purpose was, but they said it's to build a better working world, which I'm not really sure how you pursue that purpose. Is very generic. But that's their purpose, and they're going to do it through Assureco and Newco. Now, they had like these valuations, or I don't know how they came up with it, but Assureco was $18 billion firm. However, I think Assurance revenue share this year was only like $11 billion, so I'm not sure. I guess them splitting up gives an additional valuation to Assureco, but that doesn't really matter to Assureco, because they're not going to go public. It's just going to be an assurance firm, which is valued again at $18 billion. I'll put up the details on the website, so I'll put a link in the show notes for that. But they're going to have an $18 billion Assureco firm. The reason they said they're doing it is a larger market opportunity, because right now with an assurance company, they say that they're not able to get the contracts they want, the clients they want. So that's why they're doing this. We already knew that. They're going to have more growth as a separate entity. I'm not sure I buy into that because their growth was almost 10% this year. It's just hard to grow on audit revenues, because even if you do win a client, they're going to want to decrease the revenues over time. They'd have to take market share away from the other big four, which I mean, who knows? Maybe this will work out. The only other potential I see for an audit company is if the other big four accounting firms split up their audit practice and it forms one giant audit practice, but that would create even more power, even more concentration. But I do believe that is a potential here. Another thing that Carmine Di Sibio also broke news on was that the other big four accounting firms are looking into this, no matter what they say. And we know we covered it on here about KPMG saying that they're not going to do it. Well, he said that they're all basically looking at this and are going to follow suit. And they say being an audit only company would be a truly unique place in the market. They'd be a leading advisor. And when I heard that, I was thinking that how can you be an advisor if you're an assurance company, because you're not supposed to be doing that, and that's really why they're doing that. But then the person, the audit partner, which I think was a board member, said that there's no such thing as an audit-only business, which coincides with what I've said on the previous podcast about how it's only a matter of time before they get back into consulting. It's just the way it's going to happen. So it seems like if you know that you're going to get back into consulting after splitting up, then why do this? The only thing that makes sense is because they're cashing out. Both sides are cashing out. All partners are just trying to cash out. And they also say something that didn't make sense to me, that there'd be more partner promotions and that they would happen faster. Now, I doubt this. It sounds good. This is like a common myth in the big four accounting firms. And don't get me wrong, people get promoted very fast, but those people are very smart, very passionate, and they work around the clock. But you're going to be working with Fortune 500 clients. They don't want to see a 28-year-old being an audit partner. A lot of them don't even want to see a 30-something-year-old be a partner because they're much older. These people, CFOs, CEOs, are in their 50s and 60s. They're not really trying. They don't care if you're a whiz kid. They want you to be mature and have experience. And so maybe you can be a partner, but I just don't see how it can be faster than it already is. Because the big four want you to be fast anyway, because they can bill you out at a higher rate. And so that's the AssureCo side. Now the Newco side is 22.4 billion valuation. This is the entity that would go public. And this side is a lot more exciting to me because of the potential. As a staff person or lower person, you can get equity. Obviously, the partners would cash out and they would get equity. They would own 85% of Newco. And as far as the focus, they said they have a great future business with private equity. And they anticipate growth of this whole firm to be 12 to 14% per year. But I mean, who knows what the actual growth is going to be, because there's so many things in play right now, from the global economy to changing this whole brand. And they say one of the big reasons they're doing this is partnerships with tech companies, because right now they can't do it because, E&Y is the lead auditor on tech companies around the world. And the other thing too about Newco is everybody would receive more pay from additional growth, but also from equity in Newco, which I thought is very interesting. And then they tried to say the same thing for assurance, but they're like, oh, in insurance, in audit, you would only receive cash. You can't receive equity, obviously. So Newco seems like the sexier, more interesting entity here. And they also say that Newco going public would allow them more access to equity, which is true, and that they would be able to use that to pursue acquisitions of their own more frequently. Because obviously, if you're only $20-something billion in valuation and revenue, then you have a lot of catching up to do to catch up to firms like Accenture. So they would have to grow, but they could grow faster because there's so many more doors that would open. But one of the more interesting things to me that still hasn't been answered as well is which one would retain the name E&Y. I mean, maybe that's already been spoken about, but I don't think so. It's would it be the audit firm? Would it be the consulting group? Would they both still keep E&Y? I don't think that's possible. There's a lot of questions here. They reference Goldman Sachs because they are going to retain the partnership structure to some extent, that there would be partners, but they would hold the equity. So it's going to be a similar structure to Goldman Sachs after they go public or split up. And there's just a lot to be determined here. There's a lot of things to do, but they seem dead set on doing it. There's going to be a lot of legal implications and regulatory implications. But that's another thing too that they said about NewCo is that they're going to be freed up from regulatory implications. They're not going to have to deal with all that audit stuff. They're going to go to market as one global company, have one global contract on these engagements versus a million different contracts around the world with their partnerships, with their individual partnerships, which is what they have to do now. Now, if this is successful, I do agree that the other big four will follow. So we won't have the big four anymore. Or we might have big four audit firms, and then whatever comes out of the consulting side be something else. It's going to be very interesting. This really shakes up the industry. It shakes up everything. It answers a lot of regulatory problems. I think it gets regulators off your back. That's why I think EY is getting lucky because they feel the regulatory pressure, but they also want to cash out. But feeling that regulatory pressure and then just splitting up is smart because it takes a target off your back. Unfortunately, if you are in a SureCo, there's going to be a bigger target on your back because everybody's going to be like, you can't make an excuse of you're conflicted or whatever. The brand is you're a standalone assurance company that should have ethics beyond everybody else because you chose to split up, etc. So I think there'll be more bullseye on there, but I think regulators would complain more about KPMG, PwC, and Deloitte than they would on E&Y because E&Y would suddenly, the E&Y audit firm would suddenly be a lot smaller organization, and they could use that as an excuse as well. There's just tons of implications for E&Y and tons of implications for the other big four. I'd like to say congratulations to all the E&Y partners that are about to, get a life-changing amount of money and hope they spend it wisely. The other thing too that people might have to consider, or EY has to consider, is how they're going to retain people. Now they're going to retain the staff by promising them more money like they just did, but partners, I mean, some of them after this, there has to be some kind of thing in the contract when they receive this payout that they have to stay for a few years because I think many people would want to retire after this, and that would create a continuing business question of both firms to the extent that some of these partners would retire. But maybe that's also what they mean by there's opportunity for promotions, is that they expect a lot of partners to retire after this. But this is just crazy. It changes the game. I'm going to have to change a lot of things. But this is still in its infancy. There's a lot more to come. So make sure to subscribe to this podcast and check out the show notes for useful links to keep up to date. We're probably going to create multiple pages around this just to keep track of all the moving parts, but make sure to check out the show notes. Thanks for listening.